All right, guys, we'll get started in a little bit. I'm just gonna get everything going. If you guys have any questions, feel free to put them in the Q&A. Otherwise, I'll just be looking at the charts for the 4-hour candle close at 6 p.m. We got about an hour, so I can analyze, any pairs you guys want me to, or go over any strategies. I know there's a couple new people here that want me to go over all of the K2 strategies, so I'll go over that when I have time. Otherwise, I'll just be scanning the charts just to prepare trades for the next 4-hour candle close. But other than that, we have a pretty open forum. I think a lot of people aren't going to be online today because it's a lot of people just have stuff to do today. Like Aaron's going out of town, so he's not going to be here. But I'm available if you guys have any questions. So let me check the charts. Josh said, "What happened to US 30?" Man, I wonder the same thing, bro. That thing dropped like crazy. Like, I mean, it was good to see that the daily strategy work, which is probably our most accurate strategy, that hit. But this drop wasn't crazy. I don't even know what happened here. Maybe I can see if there was anything that happened on CNBC. I mean, I know that they announced Kamala Harris as the runner-up, but I don't know what really dropped it like that. So let's see. I guess Florida reports record single-day jump in deaths, but I don't think that really affected it that much. The Tesla 5-for-1 stock split, I think that would have helped the Tesla stock. Yeah, honestly, I don't know what really happened. Let's see, S&P closes lower than the first. Employment shares. I mean, I knew it was bound to drop, but I didn't think it was going to drop like that. Like, that dropped pretty crazy, and it was pretty quick. Let's see. So it dropped about from up here, or I guess the drop started right here. So it dropped from here about 5,000 pips in about 2 hours. Pretty insane. That's a crazy drop and it happened right before market closed too. There was just a huge sell-off. Let's see if there's anything here. S&P closes lower for the first time in 8 days. The S&P dropped like crazy. It shows right here it was going pretty smooth, and then around noon, this thing just went south, just like US 30. Stimulus uncertainty remains. There's nothing really that indicated a huge drop. Let me check Forex Factory if there's anything there. Let's see. So we got news right here. Yeah, I mean, there was no heavy news. I mean, there wasn't anything crazy that really happened. There was just normal COVID news. But other than that, it doesn't really look like there's anything. Okay, let's see. So Hertz sold off. That was 14 minutes ago, so that was too recent. Dang, so Hertz is going in bankruptcy. Yeah, I don't know. I don't think this would have caused the US 30 to drop that crazy, but there's not really much that happened that would have, caused prices to drop that much. 5,000 pip move is a huge move compared to how the market's been moving for the past month. Or I mean, not the past month, but I guess like the past couple of weeks. It's been a good ride. Every buy we took when we took US 30, so literally every pivot entry here was like a guaranteed win. So we took basically all of these each day, for like a couple thousand pips. Another one there, another one there. It was literally you could buy, and you pretty much had an automatic win. And that's why I took both the positions today. Like I took the daily because I already knew that that had a good chance of winning. I didn't think it was going to drop this much though, enough to hit stop loss for the pivot entry. But just looking at all of the pivot entries for the past, just the past day or Yeah, from the 7th. So from the 7th until let's see, the 6th. Yeah, so from the 7th and up, literally all the pivot entries would have been wins for at least 1,200 to 1,300 pips each. And then obviously the daily entry for today. But yeah, Josh, I'm not sure exactly what happened or what caused the drop. I mean, US 30 kind of does what it wants anyways. It's kind of moving like it did during when code first got big. So there's a pivot entry right here, but I wouldn't take it because I think price is going to correct back upwards. So I'd probably just hang off on US 30 for a bit, maybe not until London, because this just leaves a lot of room for manipulation because a lot of people are either anticipating it to correct back up or others are anticipating it to drop back down. So we'll probably see some spikes in price from now until London session. Like price will probably shoot up a little bit, then it'll come down, and then it'll just move sideways until it determines a direction, probably on sentiment. So let's see what the sentiment looks like for US 30. So US 30 IG sentiment. All right, so looking at the IG sentiment, there's actually a lot of people short right now. 73% people short. So I usually go against sentiment because you don't want to be where everyone else is going. So if there's so many people, 73% of the people are short, odds are price is probably going to go upwards. It's probably going to shoot up either to here or to here until it determines whether it's going to correct back upwards or it's going to shoot down. Since there's 73% of people that are shorting right now, they're going to want to shoot price up far enough to stop people out. So I can probably see it pushing up. You know, the next pivot area is right here, 500 pips. The last pivot is going to be 1,200 pips, but it'll probably even shoot up even higher, maybe 2,000 pips. And then it'll probably stop everyone out. And then it might go sideways again, like come back down. And then it could either shoot back up for correction or come back down. I mean, it's really hard to tell what would happen because sentiment down is so strong at 73%. But I don't expect US 30 to come down too heavily. I mean, just looking at the chart, you know, if you look back pretty far, it doesn't go down that crazy. The only time it went down crazy was during, you know, when crazy COVID news happened or when Trump said something dumb. Otherwise, you know, it just drops a little bit. So it'll drop right here. This drop was about 5,000 pips. It's exactly what happened today. 5,000 pips, corrected back up. Again, right here, price came down from right here, about 4,000 pips, and then it corrected back up. Again, right here, price came down about 2,000 pips. So same situation right here. Price came down about 5,000 pips. So it's the same. Here, I'll just take off the indicators. It's the same exact thing. So this drop right here is very similar to this drop right here where it corrected back up. This drop right here where it corrected back up. So that's kind of what I see happening here. So if you guys are looking at US 30, you know, the same pattern repeats itself every single time. Comes down, corrects back up. Comes down, corrects back up. Comes down, corrects back up. Same right here, down, up. So this dip right here, it's developing a U shape right here. So that's kind of what I see happening. I see it correcting back up here because there's so many people shorting right now. Like I said right here, there's 73% of people are short. So obviously the market makers are going to want to push the market in the opposite direction where everyone is to stop everyone out. So it's going to probably stop everyone out right here. And then it'll come down. It'll kind of probably give some people some hope that it's going to come back down. But in reality, it's probably going to shoot back up. So me personally, I don't like taking trades like this. I don't really chase, these hype trades. I like to wait for some sort of catalyst to show me to enter this trade. So in order for me to enter this trade for a buy, I would wait for another pivot entry. So similar to, what we have over here, I'm sure you guys are familiar with the pivot strategy. So I'll just go over it real quick for the new people here. So this is the K² pivot strategy. First, you want to identify the trend, K² pivots indicator. Next, identify a retracement pullback. Third, identify a rejection of K² pivots area. And then lastly, identify valid K2 signal. And then lastly, you can enter on the open of the following candle. And it's real simple, guys. It's, you know, we go over the strategy all the time, and I'll just go over here so we can show you an example. So basically right here, you want to identify the trend. You'll use the K2 pivots indicator in order to identify if the trend's upwards. You want to make sure that price is above all 4 pivots. You want to make sure that the pivots are angling in the same direction upwards and that they're spread out like they are right here. So as you can see right here, price is above the pivots. The pivots are spread out and they're all angling upwards. So this would classify as an uptrend. You know, as you can see right here, price came down, came up, came down, came back up. Once price was above the pivots again, and they were spread out and pretty evenly angled upwards, price began to trend up right here. So it trended up, right here, trended down for a little bit, came below. But that's just like an easy way to identify the trend. You just want to make sure that price is above the pivots are all angling upwards and they're spread out. So that'd be an uptrend. Right here, this wouldn't be a downtrend because you can see the pivots aren't lined up. They're not all angling. They're all kind of just jumbled around right here. Once they spread out like they are right here, it's a clear uptrend. Again, right here, this wouldn't be considered a downtrend because they're kind of jumbled up right here. But as you can see right here, as they swung back up, price was above the pivots. The pivots were angling up and they're spread out. Nice uptrend. Right here, consolidation, uptrend. So just looking at where price is right here, obviously price is in an uptrend because price is above. The pivots are spread out and the pivots are angling upwards. So first requirement's been met. Next, you want to identify a retracement or pullback. So right here, price came up, established a high in this area, and then it retraced down here. Third requirement, identify a rejection of the K2 pivots area. Basically, you just want to see a rejection off this area where the pivots are. So right here, price came up, retraced down from this area, and then rejected right here off this K2 pivot zone. So the first 3 requirements are met. Lastly, you want to identify a valid K2 signal. Right here, we have a valid buy signal, and this is valid because it's a green buy signal with a green bullish candle. So if those match up, that would be a valid buy signal. This would be a valid sell signal right here because it's a sell signal with a red bearish candle. However, the trend's trending up pretty hard, so obviously you don't want to go against the trend. So once those 4 requirements are met, we've identified the trend, we've identified a retracement, we've identified a rejection, and we've identified a valid K2 signal right here. After that, you can enter on the open of the following candle. So I'll just zoom out, use a long positioning tool right here. And there we go. And we let it run. And let's see, there goes the profit target. Took some time, but you know, eventually it hit for 1,300 pips. So basically, where price is currently right now, that's what I would be waiting for. I would wait for price to come up above the pivots, so we can establish, you know, a correction back upwards to the uptrend. And then I would identify a retracement like we did right here. So I'd wait for it to come up, retrace back down, identify a rejection off this point or wherever it retraced from, and then wait for a valid K2 signal. And then once we get that valid buy signal, then I would enter a buy somewhere over there and then write it up just like I did right here. So yeah, if you're looking at US 30, I would just wait because, you know, the area that it's in right now, it's just, it gives a lot of room for manipulation because the thing is, everyone's trying to guess which direction it's going to go. And, you know, me personally, I don't like to take those risks where I'm uncertain as to where the price could go because literally it could go either direction. So I would wait for it to come up and then correct back upwards. But yeah, that's it for US 30. If anyone else has any other questions, feel free to put them in the Q&A. Otherwise, I'm going to scan the charts for the next entry. So let's see, I'm going to turn on the SRs right here. I'm just going to make sure that all of my zones are in the proper area. iPhone's asking, what's the best time to scalp US 30? So me personally, I think the best time to scalp US 30 would probably be during London session into US session. So let's see. So I'll just mark up where London session was. So London session was right here. It started at midnight my time. And then US session closed. Let's see. about here, or no, so about 14, yeah, right there. So as you can see right here, if you traded during London to US session, there'd be one valid entry right here, another valid entry right here, and then another valid entry right here. So as you can see right here, if you took all three trades, you could have locked in about 1,600, another 1,600, another 1,600. So about, my math's off, so probably like 6,000 pips if you took all those three trades using the pivot strategy. And then you can see right here during Asia session, this is probably the worst time to trade it. So London session starts right over here. I mean, this would give you a head start into taking this specific trade because, I mean, generally we take our trades around this time anyway. So this is around 10 p.m. This is when Asia session closes. And then we just prepare for London Open. So, you know, there's one trade right there, but obviously it's a huge difference. 3 trades versus 1 trade. I mean, but it doesn't hurt to take all of them if you really wanted to. Okay, so right here, this is where London Open at midnight. And then US session closed right there. So again, right here, there's one entry during the London session for a win. There's another one right here. This could have been a partial win because it looks like our TP would probably, because obviously our TP2 would be halfway. Actually, yeah, it'd probably hit TP2. If not, it would hit TP1. So once we reach this area, we'd move our stop loss to TP1. We'd get out around that point. So there's one entry right there, 2 entries. It seems like there's about 3 entries every time. So again, right here, see during London into US session, there's 3 entries. The previous day, 3 entries. Asia session, there's only 1 entry. Although it's a good entry, it's just 1 entry. And you'd have to hold on to this for so long before it makes any, good movement. iPhone's asking, you suggest scalping on the 10-minute? Not necessarily. It just really depends on your trading personality. You know, some people like to trade on the 10-minute. Some people like to trade on the 5-minute. Because the thing is, if I like to trade on the 10-minute, that doesn't mean that you like to trade on the 10-minute. You can trade on the 5, 10, 15. But the thing is, the entries are going to be about the same. So I don't think the time frame really matters that much because the 5-minute, 10-minute, and 15-minute are so similar. It just really depends on you, on what you prefer. What indicators do we use for scalping this? For scalping this, we just use the pivot strategy, the strategy that I just went over, this right here. And the only indicators you need for this would be the K2 pivots indicator and then the K2 momentum indicator that provides the momentum swings in the market so that you know exactly when and where to enter a trade. So those are the 2 indicators that you would need for this. You can also use the trend meter if you want to see the overall trend. Obviously, it's been trending up. Or you could use the K2SR to identify, areas of rejection. But it's really up to you. I mean, the strategy only requires the first 2 indicators. But if you want to add on other indicators to have better confirmation, then you can do so. The only problem with that is that if you add too many confirmations to your strategy, because you don't have to apply the strategy exactly how I teach it here. This is just a guideline how to apply the strategy, but you can always add your own little twists and your own little things to it. Because I know a lot of other people use other indicators, like Wade uses the moon phases. Like you can use that, you can use whatever you prefer to use. But this is all you really need. You just need these 2 indicators, but then you could add on any other indicators that you prefer to use to increase your probability of winning or to increase your confidence. There's no one way to trade. There's a ton of ways to trade. You can trade price action, you can trade momentum like we do. But this is just a basic foundation how to apply the strategy if you want to trade exactly how I do. The momentum indicator is called the K² Proprietary indicator. So it'd be this one. If you go to invite only scripts, it'll be the K² Trades Proprietary Trading System. And that's the main K2 indicator. That's the indicator that pretty much gives us the edge in the market. If you apply any of the K2 strategies, all of our entries are based off the momentum indicator. Everything else complements the strategy. It gives you the framework as as to identify the direction of the trend, the direction of price. But obviously you want to know where momentum is. If momentum is moving in a certain direction, obviously you want to enter the trade before the big move. You can see here for all of the momentum like all the momentum signals, right before, like right after the signal, it'll probably consolidate for a little bit before it shoots up. Like, you know, using the K2 indicators, we're able to identify where the momentum is going to be coming from. So we have the signal here. Like, let me just back it up over here. So right here, we got a signal, right? But there was no way for us to tell that price was going to shoot up heavily, but just playing forward. So you can see this is a huge move right here. So if you enter this candle right here, you could have caught about, you know, 1,200, 1,300 pips. It just really depends on how you're applying it. But yeah, the K2 momentum indicator would probably be the iPhone. Do you have a K2 subscription? Because you need a subscription to have these indicators. You're not going to have the invite only unless you have it, because these aren't public indicators. So I'm not sure if you're looking in the same place as me right here where it says invite only scripts, because you can't search them. If you search them if you try to search them, like you search K2, they're going to have red locks next to them because they're not public indicators. So you're not going to have access to them unless you have, you know, access to the invite only scripts right here. They'd have a green lock to them if you have access to them, but if you don't have access to them, they're going to show red locks right here. You're not going to be able to use any of them. And yeah, for the new members here, I know a lot of people are asking me how to sign up. Let me give you the link. Let me see this. I'll just pull up the website right now. So for the new members here that are looking to sign up to get access to the K2 indicators and the K2 strategies, you just need to go to the website, k2trades.com. And then we still have the trial going on right now for $50 for the first month. So if you want to have access to the trial, it's only $50 and you get access to all the indicators and the course. You can hit subscribe and then it'll take you to the checkout page. And I'll show you guys what the course looks like for the new people here. So let me pull up the course real quick. Let's see. All right, so I got the course up right here. You know, once you sign up, you'll have access to the course right here. It'll give you directions how to get into the K2 premium groups, you know, the loophole that we have to get TradingView for free for the first month, and then how to access the K2 indicators. So everything's pretty much explained here. All the indicators are explained here as well. You know, the intraday strategy, the momentum strategy, the scalping strategy, the zone strategy, and the pivot strategy. This is probably the one that I recommend for everyone to use if you're just starting out, because it's super simple. But let's see. Charles is asking, please explain the 3 MAs. Which one are you talking about, Charles? Are you talking about the pivots, the K2 pivots indicator? I'm not sure if that was what you were talking about, Charles. Because there's 4 lines for this one. I'm not sure if this is it or if you're looking at something else. I'm pretty sure this is what you're talking about. So I'll just go over real quick. So if you guys aren't familiar with the K2 pivots indicator, this is the most recent indicator that I developed and I released to the K2 members. So basically the way that the K2 pivots indicator, I'll go on the higher time frame so it's easier to look at. So pretty much the K2 pivots indicator is used to identify the trend for that specific time frame. So right here we're looking at US 30 on the 4-hour time frame. Basically, when price is above all 4 pivots, then this is going to signify that price is trending upwards on the 4-hour time frame. One way to confirm that the trend is going upwards is to make sure that price is above the pivots, that the pivots are spread out, and that they're all angling upwards. So obviously right here, price is above the pivots, it's angling up, and they're all moving in the same direction. So right here, obviously it's an uptrend. Right here, This wouldn't be a downtrend. This would be more like consolidation because, like I mentioned, price would have to be below, but on top of that, the pivots would have to be spread out like they are right here. Right here, you can see they're jumbled up. They're not spread out. So this is indicating some sort of consolidation. Until they're really spread out and they're angling in the same direction, then that would confirm a downtrend. But on top of that, you'd have to use the momentum indicator to identify the momentum. So you can see right here, price swung upwards, and then you already knew that momentum was swinging up. So just tying all those together, momentum swing up plus the price was above the pivots were spread out and they were angling all upwards. That's a clear direction up. Again, right here, you can see price came down. I'll just hide this. You can see right here, price came down below the pivots, and then the pivots were spread out and they were angling downwards. So as you can see right here, it was in like a short-term downtrend. It wasn't a very strong downtrend because they're not spread out like they are right here. This is a huge uptrend. You can see how different these pivots are spread out compared to this one right here. But as you can see right here, price was angling down and it dropped about 6,700 pips. So it's a big movement for US 30. And another way to use them is you can use them as areas of pivots. That's why they're called K2 pivots, because they're areas where price will reject from. As you can see right here, price came up, came down, pivoted off here, came back up, came down, and it just keeps pivoting every time it reaches the K2 pivots. And also the pivots have 4 different levels. So green is level 1, yellow is level 2, orange is level 3, and red is level 4. So the farther it gets down to the farthest pivot, that's when you can anticipate that price is attempting to reverse in the opposite direction. So you can see right here, price came down. It rejected off the first 2 pivots right here. It rejected off the 3rd pivot right here. And then it broke right through the 4th pivot. Once it broke through the 4th pivot, it shot down about 12,000 pips. And then it came back up, rejected again off the pivot, the level 1, and then it came right back down. And this gives you, it gives you prime location as to where you probably should enter a certain trade. So if you're entering a buy over here, so, going back over the original strategy that I just discussed, let me see if I can just copy this. Yeah, it'd be easier for me to just copy this. So this strategy works on all time frames. I went over here on the 10-minute. I showed you guys all the potential wins there. Again, right here on the 4-hour, it can be used for scalping, intraday, or swing trading. It's really up to you how you want to use it. There's no one way to use the K2 indicators. It just really depends on how you want to use it specifically. So looking back at the strategy, I can go here and just rewind to this point. So like I mentioned before, identify the trend. Price is trending up here because price is above the pivots. The pivots are angling upwards. You can see it's kind of hard to see the green one, but if I move over it like this, you can see that the green one is actually angling up. So the green one's angling up, the yellow is angling up, orange is angling up, and red's angling up. So obviously it's trending upwards. So next you identify the retracement. Price came up right here, came down, came up, established a high, and then it retraced downward. So after it retraced down, we look for a rejection. Right here, it rejected off this level 4 pivot. After that, we want to identify a valid K2 signal. Right here, we have a valid buy signal because it's a buy signal with a green bullish candle. Once you've met those, you can enter a buy right there. Zoom out of here. Zoom out a little bit. Could enter a buy right there. I mean, this is a big move, so I'm gonna make this a little tighter. The previous swing, it's about 3,600 pips. So again, right there, you let that run, and there you go, profit target. So the strategy works on literally all time frames. You could apply it on the 4-hour, you could apply it on the 10-minute, you can apply it on the daily. It's really up to you how you want to apply it. So if you apply this over here, same thing. So let's move it forward a little bit. Yeah, again right here. So again right here, it's trending up, obviously. Retracement right here. So it came up, came down, came up, established a high, retraced down further, and then rejected off right here. So after rejected like that, we had a valid K2 buy signal right there. Give enter to buy. But applying this on the daily is kind of risky because you never know what's going to happen with US 30. So I wouldn't recommend swing trading US 30. But if you did, it looks like it's about to hit TP. It just really depends. iPhone said, what strategy do we go with if one contradicts the other? Most of the time, all the strategies are going to be the same. The only difference is going to be the daily US 30 strategy because that's not based on trend. If you look at every other strategy, they're all based on trend. So, obviously, if we're going to be trading with the uptrend, all the entries are going to be up. Or if, price is trending downwards, all the entries are going to be trending down. The only difference is the daily US 30 strategy. So it's really up to your own preference. There's no specific one, but it's just really going to be up to you whether you want to focus on the daily US 30 strategy because it has a high win rate, or the pivot strategy. Me personally, I would go with the daily strategy for US 30 because it's already been proven to have a super high win rate. But it just really depends on you if you want to trade it that way. Or you can trade both. Like yesterday we had the daily and it hit TP1, and then after that it went to full TP for the pivot entry because it was trending upwards. So you could literally win both ways. You don't have to just trade one way. You can trade both ways, just depending on how you want to use it. iPhone said, what strategy is easiest for Forex pairs? All of them. I mean, I don't know how experienced you are because you can test them all and see which one you like best. It just really depends on personality. Like if you don't like the pivot strategy, you can use the intraday strategy. If you don't like the intraday strategy, you can use the momentum strategy. They're all pretty much the same thing, just with different entries. Let me see if I can trade an example. So, back to the example right here. So right here would be a valid buy entry using the pivot strategy, right? So that's a valid buy entry. If you're using the intraday strategy, we have to go on the lower time frames for that. So let's go on the 30-minute. Okay, so right here, this was the same one we covered earlier for the pivot strategy. So price came up, came down, came up, valid entry for a pivot entry right here. So this would be the pivot strategy. If you were to take a buy right there, that's for the pivot strategy. If you wanted to apply the intraday strategy right here, green matches the trend meter down here, green, same exact entry. See, it's the same exact thing. Or if you want to do the same thing, this would be a valid entry up here as well. And then if you wanted to take the pivot strategy, it's the same entry because price came up. So price is trending up, price came up, retraced, rejected right here, buy signal. So you take that buy. So that lines up exactly with the intraday strategy. It just depends on your personal preference as to how you want to trade it. If you're trading the momentum strategy, you can see right here, price came up. It's an opposite signal from the trend meter. You enter on the high of that candle, the same thing. They're all pretty much going in the same direction because we're all trading in the direction of the trend. So it just really depends. All the strategies are very similar. They just have different entry points. So those are 3 different strategies that I just showed you right now, like 3 out of the 5 K2 strategies, and they all work the same. So me personally, I would just recommend that you practice the strategy or actually try them out and then see what you like better because they're all pretty much the same thing. It just really depends on how you want to trade, personally. So let's see, I'm going to keep going down. Charles is asking, once the momentum shows up in the 4 hours, can we enter a trade on the... Hey, Charles, so for that, I'm kind of confused with your question because you said if the momentum shows up on the 4 hour, can we enter on the lower time frame? Let me see. So basically, the momentum candle is going to be different. So, okay, so right here we have a buy signal, right? This is on, or actually, let me go on the 4 hour. Okay, so the 4 hour, we got a buy signal right here. Let me just take off these. So we got a buy signal right here, a buy momentum candle. it's not going to be the same. Like you could enter the trade because it's still going to be the same thing. But if you go in the lower time frame, see the buy signal came a lot earlier. So, I mean, you could, if you want. I'm just kind of confused with your question because you're asking once the momentum shows on the 4 hour, can we enter on the lower time frame? Because it wouldn't really make a difference if you're entering on the 4 hour. So right here we have the momentum signal. If you were to enter at this specific price, the price doesn't really matter because the price is 26,574. If you go on the lower time frame, you're still going to enter at the same price. It doesn't really make a difference whether you're entering on the lower time frame or if you're entering on the higher time frame. You're still going to get in at that same exact price point. So I'm not sure if you meant something else with that question, but you could analyze it from a top-down analysis. Like you can analyze it on the 4 hour and then drop down to the 30-minute if you want to wait for another buy signal. But like I mentioned, see the buy signal showed up right here on the 4 hour. But the thing is, a 4 hour candle technically has what was it? Not four, has about 8 30-minute candles in there. So if you go back 8 30-minute candles, technically that was 1 2 3 4 5 6 7 8. Technically this would be the the thing just reset. But I'm going to try to see. Yeah, Charles, I don't know if you understand what I'm trying to explain, but yeah, so say if you got we'll just go back to here. Okay, so replay to here. At this point, we got a buy signal. We go down to the 30-minute lower time frame. You could wait for another buy signal. So wait for this to come down. Yeah, and then you could take this one right here. But the thing is, I wouldn't recommend that because you're entering this trade late. So the trade actually showed up. I mean, the buy momentum candle showed up over here on the 4 hour at 5 a.m. on August 3rd. And then you wait like a whole 24 hours to enter this trade. You know, at that point, you kind of defeat the purpose of getting in at that price. You could have got in right here, and then you could have profited from right here all the way up here for about 2,000 pips. So I would just go off the strategies that I'm teaching. Like, I don't know, this analysis doesn't make sense for me because you're going to be entering like way too late. So you could apply it that way if you have a strategy that you apply that will work in that perspective. But I mean, me personally, if you see the momentum candle on the 4 hour, you might as well just enter it here, then wait for another one on 30-minute. Because like I said over here, this one didn't come until also 5 p.m. The next buy candle didn't come until for 18 hours. So you've been waiting for 18 hours when you could have profited just entering on the 4 hour candle. But yeah, I mean, if you have a more detailed question or you like, if there's a specific way you want to apply it, I can go over that. I just don't understand what you're asking by that specific question. But yeah, you can do a top-down analysis if that's what you want to do. Let's see. All right, iPhone's asking if GJ is a good sell right now. So I'll go on the 4 hour. Let's go to GJ. Let's run the pivots. No, I don't see it as a sell. It's in a strong uptrend, iPhone. Is there a reason why you think it's a sell? I can analyze, like, you know, if you have reasoning behind why you think it's a sell. I do see it's in a zone right here, but the thing with the zone is that it could still push up. It could still push up to test the upper zone, or it could come down, and then it could just keep ranging within the zone. I wouldn't look at it as a sell until we have a sell momentum candle, and then if it's below the pivots. So if it closes below the pivots and then we get a sell momentum candle, then I can look for sells. But right now it's in a strong uptrend, so I wouldn't, like, I personally wouldn't sell this right now. It just doesn't look like a good sell at all. So like right here, so if price was to come, so right here price was above it, price closed below it right here, and it came down, rejected, came up, rejected, came down, rejected, came up, rejected. And then right here, we had a sell momentum candle. So once it broke below the zone right here, then, you know, I probably would have taken like a short sell right here, like a quick sell before it reached this lower zone over here. So I'd probably exit somewhere around there for like 80 pips and then ride it to the next zone. And this is pretty much just applying the zone trading strategy, which is a strategy that I use for all of the K2 signals. All right, let's see. Anonymous attendees asking, how about the sell for US 30? Didn't it indicate? So how about the sell for US 30? It didn't indicate it, did it? Yeah, so if you're not familiar with the daily US 30 strategy, I could go over that right now. That's one of the easier ones. So that's one that we normally apply. And for that, we just use a momentum indicator. So it did indicate a sell because if you are familiar with the K2, let's put it here, K2 daily US 30 strategy. For one, you just look for trades after the New York Stock Exchange open, which is 6:30 a.m. Pacific Daylight Savings Time, my time. Next, identify the first K2 momentum signal. 3, enter on the close of that candle. So it's real simple. It's only 3 requirements. This morning, market open right there. I'll just replay it from right here. All right, so just going back to, you know, the current chart right here. First of all, you're going to look for trades after the New York Stock Exchange open at 6:30 a.m. Right here, 6:30 a.m. That's when the New York Stock Exchange open. After that, you're going to identify the first K2 momentum signal. I'll put valid. First valid K2 momentum signal. And if you look back at what I discussed earlier, a K2 signal is valid if it's a sell signal with a red bearish candle. Vice versa, if it's a buy signal with a green bullish candle, then that'd be valid. So right here is the first valid K2 signal. So first requirement's been met. We look for trades after the New York Stock Exchange open, 6:30 a.m. right here. We've identified the first valid K2 momentum signal. Right here's the valid sell. So after that, you enter on the close of that candle. So you enter right here. Generally, we put our stop loss at the previous swing, which is right here, but we always put a minimum of 1,500 pips. So there goes the setup using the strategy that we use every day. You hit play, and there you go, profit target. And that's how we hit our TP today. And that's how it indicated to take a sell. This is the same strategy we use for, you know, every morning US 30 entry that I send out. So all of the US 30 wins that we've had, you know, the past, what, like 3 or 4 months or maybe 5 months, they've all been from using this specific strategy. And it's real simple. You do the same thing every single day. Non-attendee. The buy strategy was the pivot strategy. That's the same one that we used yesterday. So the way that the strategy works, I just deleted that too. Let's see. Let's copy it from. Do I still have it here? There we go. Okay. So let me do this again over here. There's a daily strategy. There's a K2 pivot strategy. So first you identify the trend. I'll just rewind it to over here because this is a clean entry. And this is the one from yesterday. This is actually the same one that we took yesterday morning, the one that we won for 1,500 pips. So, oh crap, that's the wrong one. All right, there we go. Let's put this up here. All right, so for this strategy, you're going to identify the trend using the K2 pivots indicator. So the K2 pivots indicator, price is trending up. If price is above all 4 pivots, the pivots are angling in the same direction. You can see the green, yellow, orange, and red are all angling upwards, and they're spread out. So if they're spread out, they're angling, and price is above the pivots, that's an uptrend. So right here, price is trending up. First requirement met. Next, identify a retracement pullback. So price came up from right here, established a high, came down right here. There's the retracement. Requirement number 2 met. the third requirement, identify a rejection off the K2 pivots area. Price right here came up, retraced right here, rejected down here. So first three requirements have been met right there. Lastly, identify a valid K2 signal. Right here's a valid buy signal because it's a buy signal with a green bullish candle. So once all those requirements are met, you can enter on the open of the falling candle. This is the same exact trade that we took yesterday. Enter a buy right there. Like I mentioned earlier, put our stop loss at the previous swing, which is right here, but we always use a minimum of 1500 pip stop loss. So we let that run, and then took some time, and then it finally hit last night right there. So that's the other strategy. That's the buy strategy that we applied. iPhone 6, could you please host a scalping call one day? Yeah, I mean, I've been trying to, but actually, I don't know, I might. Because the thing is, I don't like to be on a live call when I'm trading myself because it just distracts me because I get a ton of questions. And, you know, for me, my count is always going to come first, obviously. So if I'm risking my trades to, you know, help you guys out, I'm probably not going to do it live. But you can do it yourself. Like, you don't need to watch me live do it. Like, you can literally have the strategy and do it yourself live. I mean, that's how everyone else is doing it. And just watching me trade live is not really going to help you unless you actually learn from it. And that's why, like, I don't really push for signals. You know, I'd rather teach you guys to trade how I do, because it's really easy. Like these requirements, like you can never get these wrong. If these requirements aren't met, then there's no trade. But if they're met, there's a trade. There's like no subjectivity here. It's all objective. Like if there's a trend, then yeah, requirements met. If there's a retracement, like there is right here, then requirements met. If there's no retracement, there's no trade. Similar with number 3, if there's a rejection, you know, it's hard to get it wrong because all these things are so specific. Like if there's a trend, there's clearly a trend here. Retracement, clearly retracement. Rejection, clear rejection right here. And then a valid K2 signal. You know, there could be a valid signal or there can be an invalid signal. There's no gray area here. And then you can enter on the open of the falling candle like we did right here. So pretty much if you learn the strategy and you apply the strategy yourself, it's going to really, that'll help you a lot more than watching me trade live because you're literally doing it yourself and you're applying the same thing that I'm doing for, you know, all the signals that we send out. Let's see, one more question from Charles. Charles is asking, the zones are also drawn by the K2 indicator. So Charles, the zones are drawn using the K2 SR indicator. So if I delete all this stuff and then I just turn on the K2 SR indicator, you can see right here that the zones have been drawn. So right here, you can see that there's zones. The way that I do it is I'll have these zones up, but then I'll just draw my own manual zones over the zone. So there's zones here that are outlined for you. All you gotta do is draw your own zones over the K2 zones. And then they automatically adjust as price moves. So as price moves, so will the zones. So if I rewind price, so then once I have those drawn up, let's move this stuff over. So once I have those drawn up, I'll just hide the indicator so it doesn't look all messy on the chart. So now we have the zones on the chart. And then if you just go and rewind it, so those are the zones for that specific time period. If you turn on the SRs over here, there's more zones over here. So you can see as price moves, new zones are created. So let's let this run. You'll see price respect those zones pretty nicely. You can see price, whenever it gets near those zones, odds are it's probably gonna reject off them. And then you can see right there that price goes and respects these zones. And as price reaches new zones, it'll create new zones for you to draw. So literally every couple hours or before I enter a trade, I'll go through the chart and I'll go identify zones before I enter any trades. And this is all automatic. You can see the zones right here. So if you want to extend the zones out further, you can do that. So see prices way down here, you can just extend these zones way down here. to keep following price as price keeps going. And that's basically what I do, because the zones don't really disappear until, you know, prices moved out so far where it's not even close to any of those price points. And then, yeah, again, right here. And then this helps because this will help you identify where price is likely to reject from. So if price was to come down, you'll see areas where price is probably going to hold. So you can see right there, it's perfect. See the zone was drawn way back here. So as price came down, it came down and it tested that zone. It broke right there, and then it retraced back up from that point because you knew where that zone was from the past. And then price came down again. Look where it rejected from. It rejected off that same exact zone that was created way over here, like days back. These are the same exact zones that we drew way over here. And these just happened today from that drop. And yeah, pretty much this will help you identify, you know, where price is going to be rejecting from, or it's going to be, you know, breaking into new levels. Let's see. All right. Brian's asking, Shawn, what is the average? What is the average pimp count towards stop loss in either buy or sell? I was wondering how you established. I don't know personally what the average is, but every time I've done testing, so I have a whole spreadsheet. I've gone back and I've tested a ton of stuff. So like a lot of these strategies that I've shown you, I've tested these strategies like back and forth years and years back. So right here, I have all of the wins and losses testing that US 30 strategy. And then as you can see right here, 1,500 pips is generally the sweet spot for, you know, for trading this specific asset. I mean, every asset's going to be different, but you're not going to know these numbers unless you go and test them yourself. You know, I do this for all the K2 members. That's why, you know, we have such a high win rate here at K2, because I actually do a lot of these testings myself. Like I enjoy doing this. I like to know where my probability is when I'm trading these specific assets, especially US 30, because this is like everyone's favorite. But you know, one way to see the average is you would just mark up from each session. So like right here, so this is 6:30. This is an unusual move, so I wouldn't even count this. But if you count like yesterday's, so yesterday was about, let's see, 6:30 a.m. to, I guess, 15. Yeah, so you can guess the average here just by measuring this. You know, price started from down here and then it ranged all the way up here for about 2,500 pips. So this is actually considered a big move. So if we go back over here and then we just do the same exact thing from this point, or 6:30 a.m. So 6:30 over here, and then the market closed right here at 2:15. So if you measure this right here, you can see that the low was from right here and the high was right here. So I guess the average is about 20, it's about 2,000 to 2,600 pips. But let's see again for the previous day. So again, right here, let's move to 6:30. I haven't done this in depth. So like the thing is, the market moves different. So you have to always adjust the strategy or adjust your data depending on how the market moves, because this is a totally different time. Like, you know, we're trading during COVID. Like COVID wasn't here last year. So the thing is, you always have to sharpen your skills. So again, right here, about 2,500 pips. So it looks like the average is about 2,000 to 2,600 pips. Recently, I guess from the 6th. The thing is, we've had a lot of volatility that, like more recently, the past 3 weeks. Generally during summer, the market's it doesn't really move like this. But you know, we're also during COVID too. So there's a lot of random news that come out, and there's just different things that are affecting the market that are causing a lot of these movements. So let's measure this from right here. Yeah, so that looks like about the average. The average looks about 2,000 to 2,600 pips. And the thing with the K2 strategy, the daily strategy, is that, so this is the secret behind the strategy. I mean, you're not going to know the secret without, you know, having the indicators, but pretty much the way that the strategy works is, so I'll go back to currently. The way that this strategy works is that we're getting an edge in the market by basically catching momentum as the market opens. So like I mentioned, we wait for the market to open at 6:30 a.m. So 6:30 is going to be right here. And then what we're waiting for is we're waiting for the institutions and the market makers to set the direction of price, because generally once they swing momentum in a certain direction, like right here, the first entry after the market is open, generally price will continue in that direction for the rest of the day. So obviously right here it consolidated a little bit to like sucker people into buys because it was in such a strong buy. But if you took the daily entry, you would have known already that it was going to come down, because we already knew where the institutions and market makers were pushing the market for the rest of the day. Because generally when the market opens, they'll push the market sideways for a while until it actually goes in the direction that they already planned for. Because, you know, the institutions and the market makers, they've already planned this, you know, days, months, weeks ahead. Like they know the direction that they're going to push price for that specific day, you know, depending on what's going on. Because, you know, obviously the market's, like, as much as people want to not believe that the market's being manipulated, it's always being manipulated. You know, the banks and the institutions control the market, so they know the direction of price. The thing is, you want to pretty much ride that wave that they create, and you don't want to get caught in all the noise in the market. So that's why we have the K2 momentum indicator, because it gives us the edge in the market, so we know exactly where price is moving. But yeah, I mean, that's probably the average for that. But there's a lot of different factors that go into it. You know, the market moves specifically to whatever conditions are present at the time. Let's see. All right, guys, it's 5:40. So Ebony, I see your message there. I'll come to your question in a little bit. I just need to scan the charts because we have the candle closing soon. So I'm just going to scan through the charts real quick, and I'm going to see if there's any entries for us to take. So if you guys are familiar with the K2 zone trading strategy, that's pretty much the strategy that I use for all the signals. I use that, and I use the pivot strategy. So those are the two main strategies that I apply. And if you guys want to trade exactly how I do for the signals, then I'd recommend that those are the two main strategies that you focus on. And I trade them on the 4-hour chart. So this helps if you don't have a lot of time, because you only need to be on the computer when the 4-hour candle closes. So the 4-hour candle closes at 2 a.m., 6 a.m., 10 a.m., 3 p.m., or no, 2 p.m., 6 p.m., and then 10 p.m. So it's the same time, a.m. and p.m. So as long as you can get on the computer from 2 a.m. is probably not going to meet your, you know, your availability, but 6 a.m. could probably meet it if you be on the computer for a few minutes, and then 10 a.m. and then again at night for 6 p.m. and 10 p.m. So if time is an issue for you, or if you don't want to be on the chart all day, the 4-hour time frame is probably the best time frame to trade on. But yeah, so let me look at the charts real quick. There's no entry here. This would have been a valid entry, but the reason why I didn't call it yesterday was because there was a zone right here. You know, obviously once price gets close to a zone, odds are it's probably going to reject right off it. And that's why I decided not to call that, and I'm glad I didn't, because price already came down. Let's see, odd NZD. For this, I was waiting for price to break this zone right here. So if price was to break the zone up here, I would have taken a buy. The way that the strategy works is basically you want to identify when price breaks a zone, and then it's in the direction of momentum, and it doesn't need to be in the direction of the trend, but preferably, yeah, we want to trade in the direction of the trend. So right here, if we took this trade, which I think we did, the odd NZD, obviously we ride it to the next zone. So there's no entry here. There'd be an entry if price broke above the zone, but that hasn't happened yet. This is one entry that I wanted to call today. I mean, good thing I didn't call it. Reason I didn't call it is because of the pivots. Like, although it's not a requirement when applying the strategy, it's something that you can take into consideration, because obviously you want to trade in the direction of the trend. Right here, you can see prices jumbling between the trends. So there's no specific trend that's been established, and that's why I didn't call this specific trade right here. But there's no entry here. If there was a sell signal, then yeah, there would be an entry, but currently there's no signal there, and the momentum's still upward. So we wouldn't take this trade down here. We would wait for price to come up right here, break this zone, and then provide for a buy entry upwards. But right now there's no entry for that pair. But we still do have the active trade. So this trade was from last week. I got stopped out already at TP2, like somewhere around the middle. But if you guys still have this trade active, it's still going, and the trend is still heading upwards. So it could still come up. I just wouldn't take it right now if you guys aren't already in it. This is our CAD CHF trade from yesterday on the 10th. This already hit TP2 like way over here for about, I think, 25 pips. But the full move is going to be 50 pips. It looks like it can still come up. So price broke this zone right here. What might happen here is price will come down, reject off the lower SR, and then shoot back up to full TP. So that could be setting up right now. This is our CAD JPY position. I forgot why I didn't call this, but this would have been a great entry for full TP. I'm not sure if I called it or not, but this would have been a great entry. CAD JPY, I mean CHF JPY. I think we took this trade and then it hit CP already, but there's no entry right now. So if price was to break above the zone, like somewhere up here, and it closed above here, then that'd provide for a long entry. But right now, price is still below, so no entry there. Euro AUD, let's see how many pips. Generally, I like a buffer of about 20 pips if I'm to enter a trade. So technically, actually, I'm more like on the 25 pip side, because the thing is, the last thing you want is for price to reach the zone and then head far down. But if you're able to reach about 20 pips, once price reaches 20 pips, you can always move your stop loss and profit to that first TP, like right there. So if price was to come down, so say it comes up and then it comes down. If that was to happen, you get stopped out in profit and then the trade's risk-free. But in this point, it's just way too close to the SR level right here. It's about 20, 25 pips. So I personally wouldn't take that. This is a Euro CAD position here from yesterday. I didn't call it because it looked a little bit risky, but it looks like it would have been a good trade. It looks like it would have been hitting TP1 would have hit TP1, and then it probably would have hit TP2, and then it would still be active going down. But I didn't call it for, I forgot what reason. I think there was news or something. Euro CHF, nothing there. Euro GPY. Yeah, nothing there. Euro JPY. This is the trade that we still have active from yesterday, I think. Yeah, from yesterday night. So we took this trade. It got really close to full TP up here, but I got stopped out at TP2 over here. So you can see it came up, and it was up here for about 2 to 4 hours. So at this point, I moved my stop loss and profit, and then I got stopped out. If you guys are still in the trade, it still looks like a good trade. So it's rejecting off the K2 pivots right here. So it could still shoot on up. But I would recommend moving your stop loss and profit. Same situation here with odd NZD. I want to wait for price to break above this zone and for there to be a buy signal, because right here we have a sell signal, so momentum is still has a sell bias. But if price was to give us a buy signal up here, then it would conform to the overall trend. Obviously, price is trending up right here, and then we want a buy signal. So if we get a buy signal right here, then this would be a valid pivot entry. It would also be a valid zone entry as well. Your USD. Yeah, so this would have been a valid entry right here. But like I mentioned earlier, it's too close to the zone. And good thing we didn't, because this is exactly what happened. It came close to the zone and then it rejected back up. So that's probably what's going to happen again right here as price comes down. It comes down, and then it could either reject off this point or continue downwards. So the thing is, if it closes below here, then I'll take that sell, and then I'll write it down. I just don't like to trade within this point, because these are very uncertain areas, because the thing is, price can go either way. And I would want that extra confirmation before I enter this trade. GBP AUD, there's nothing right here. We do have an invalid buy signal. You could take this for a late entry over here, but it's too close to the zone right here. And then, like I mentioned before, once it reaches this point, it could reject right off. And you don't want to get caught in that position. Like you want to take trades that are for sure. Also, it looks like it's consolidating sideways, so it's not something that I would want to risk taking. See, GCAD right here would be great if it closed below. Unfortunately, we have a bullish candle there. But if price was to close below the zone right here, then I would take a short position. But it doesn't look like that's going to happen. I'm just going to mark it just in case so I can look back at it before I hit 6. For GBP over here, it looks like, so yeah, price is rejecting off this point right here. So thing is, it's rejecting within 2 points. So it's getting close, and it's like creating an ascending triangle. So here, I'll just draw it so you guys can see what I mean. So looking at it right here, so the pivots kind of act like a trend line. They're like it's like an active trend line. So as it moves, you can see that price comes up, it comes down, it rejects off the pivot, and it comes back up. Again, right here, price is pretty much bouncing around this area. And then price is probably going to come up right here, retest the zone, come down, retest the pivot when it gets to this point, and then it could either break on upwards or break here and come down. So it's just a really risky trade to take until, you know, it moves out of the zoned area. GJ, we just went over this earlier too, so it has a buy bias right here. We did take this trade. I think it hit full TP already. So we took this trade somewhere over here. Yeah, we took this one actually, and then it actually hit full TP. So this would be a pivots entry. It'd also be a zone entry, but we broke into this upper zone. Like I mentioned before, when price gets within the zone, it'll probably consolidate before breaking on outward. So it'll probably come up, come down, and then it could probably either continue back up or break below. So me personally, I wouldn't really want to trade within this zone. Although it's a pretty decent area, it's just risky. I mean, until we have I would wait for an actual signal to give me a catalyst as to enter the trade, because you don't want to enter a buy here because you think it's going to come up and then it ends up coming way down, and then you end up getting caught with that trade for, you know, the next day or so until it breaks out of that zone. So let's see. So nothing there. GN, nothing here. Like I mentioned with the zones, these zones over here, they're strong levels. So you can see price came up, tested the upper zone right here, then it came back down, rejected off this area, came back up, rejected off the zone again, came down, rejected off the zone again right here. So you can see right here for the past 24 hours, or no, a day and 8 hours, it's literally just been ranging and rejecting within 2 zones. So that's why I generally don't like to trade within the zones, because it just provides for areas of rejection. And then the thing is, once the market makers decide to push price in one direction, it's either going to skyrocket up or it's going to skyrocket down. So if you're on the wrong side, you're going to get screwed. For GU right here, it's right next to the zone. So like I mentioned earlier, price is likely to reject off the zone. So it'll probably reject off here. But I would want to wait for it to close below the zone. So if price was to close below the zone over here, then I would take a sell. But there's just no entries that are lined up right now. So we're going to ignore GU. NZD-CAD, this is an entry that I saw earlier. Just like I mentioned earlier, it's too close to the zone. So even though price broke below right here, and then I'm anticipating it to come down to test this zone, the only problem is that it's just way too close. So it's about 30 pips, which is a decent amount of space. But if you're familiar with NZD-CAD, this pair just moves very unusual, and it's really slow. So that's why I didn't call it, because I like to call trades that I'm almost 100% sure that it's going to hit. This is a new entry over here for this specific pair. This trade's still active from last week, I believe. Yeah, on the 4th. So this trade came down, hit TP1, actually got stopped out at TP1. So once it hit TP1, I just got out. But if you still have this trade, it looks like it's still coming down. So it could still continue down. It's just a risky trade. So if you're still holding it, you should probably still be in profit right now. So me personally, I would just exit the trade if you still have NZD-CHF open. NZD-JPY, no entry here. It's in an overall sell, so I'd wait for a sell signal. If we get a sell signal, then maybe I'll ride this down to the next pivot. Yeah, because it's about 50 pips. So if we get a sell signal here, you can take a sell and then ride it down to here, because our short position would be somewhere over here, about 42 pips. You might even get full TP before it gets stopped out. Or once price reaches 50%, we would just move our stop loss to TP1 or so on, you know, to eliminate your risk and to guarantee profits. So there's NZD-JPY, NZD-USD. This is actually a really nice entry. I think I'm gonna call this. So we have about 6 minutes on this candle left. If this candle closes below the zone, then I'll probably call this entry. It's a bit of a risky entry, but I think it should be fine. So let's see. So this would be the full move for NZD-USD. For this strategy, I'm going to be applying the K2 zone trading strategy. So I'll just put it out right here real quick. K2 SR zone trading strategy. So first, you want to identify direction of momentum. K2 momentum indicator. Next, identify a break and close past K2 SR level or zone, whatever you want to call it. And then, you know, once those are met, you can enter on the open of the following candle. So right here for NU, in order to identify the direction of momentum, you just want to make sure that there's a valid signal. So if we have a valid sell signal right here, then this would confirm the direction of momentum downwards. Right here, we had a valid buy signal, but it was against the trend. So obviously, you know, odds are it's probably going to come back. Exactly what happened here. Price came up, rejected off the SR level, and then it came back down. So just looking at this here, obviously direction of momentum is down. You can, you know, in comparison right here, we have a valid buy signal with a bullish candle. So after this, momentum swung up. Right here, price was against the trend, so obviously it rejected. But right here, we had a valid buy, and then momentum swung up. It's an invalid signal, so it consolidated. Right here, a valid buy, but then as it came up, it rejected off the zone. Right here, same situation. Price just keeps rejecting off these zones, like I mentioned. They go from zone up, zone down, zone up, zone down, zone up, zone down, zone up, and it just keeps bouncing around. So for this situation right here, if this was to close below the zone, I'm anticipating price to come down to this zone and test. So in this situation right here, we can probably reach 50% profit before moving our stop loss and profit, or we can move, you know, so like right here. So if I put this line right here, this is probably gonna be half profit. So once price reaches, this would be considered TP2. You can move your stop loss to TP2. So once you do that, you eliminate risk and you guarantee profits from here. So right here, you guarantee making half profit, while on the other hand, you can shoot for full profit down here. So you have your stop loss right here. You have no risk. It's risk-free trade. And then everything moving forward is guaranteed profit. And that's the way that we teach here at K2. You know, at K2, we're all about risk management. If you're able to, you know, exercise proper risk management with every trade, you know, odds of you succeeding in trading long term is very likely compared to someone that doesn't use proper risk management and just gambles like for every trade. So let's see right here. So we do have this entry coming. I'm just gonna, well, I'll come back to it. We have some time still. So let me just go back to this one. Nothing there, nothing there. So our only valid entry would be for NU. This is for UCAD. We had a valid entry right here. I'm not sure if I called it or not. I don't think I did. I might have forgotten last night, but this was a valid entry. I think I showed it to Aaron. And I think one of us was supposed to call it, but we didn't. But it looks like it would have hit TP2 right here. So we would have moved our stop loss to TP2, somewhere down here. And as price came down and then it reversed right here, we would have gone stop down profit. But there's no valid entry right now. Like we totally missed this entry right here, but it would have been a good trade if we did take it. Yeah, so NU is looking good. So wait for that a little bit. We have about 2 minutes, so I'm just gonna, before I call for any other trades, I'm gonna go and set this up right here. I'll just set up the signal right now. So let's see. Let's do sell stop. Okay. Sell stop for NZD USD. I don't have the specific price points yet, so I'll just keep that blank for right now, but it's for 60 pips. So this is pretty much how I call signals, guys. I use the same strategy that you guys are taught, so you guys can learn how to trade exactly how I do. There's nothing different that I do. Everything is exactly the same that you learn. So if you guys want to learn how to trade exactly how I do and produce the same results, just learn the same thing that I'm trading. All right, so I'm just waiting for this to close. Once it closes, I'm going to call the signal. I just want to make sure that it's exactly on point. Got about 30 seconds left on this candle. Once it closes, I'll make the call. Tiffany's asking, where do signals go? Telegram channel? Yes, Tiffany. So for our signals, this is going to be sent in the premium. It's not going to be sent in the public group. Generally, the trades get sent in the premium group first, and then in about an hour or two, they'll be sent to the public groups. But if we hit TP already, then I'm not going to send them to the public groups because it's obviously it's too late for anyone to enter that trade, because we've hit TP already. So if you're in the premium groups, you'll get the signal. If you guys are here watching, you guys can copy the signal as it is right here, as I post it up. So entry right there, TP right there, stop loss right there, TB2 right there. And I usually just, I mark it down halfway, the halfway mark. So full TP 60 pips, TB2 is 30 pips, TP1 is 15 pips. And these aren't targets where you're aiming to hit. Like we always want to hit full profit. We're never aiming for the smaller of the full profit. But what we do with the TP1 is we just move our stop loss to that point so that we can eliminate our risk and guarantee profit. We're not putting in 3 positions. We're putting in 1 position, or if you're trading exactly how I do, then we put in 2 positions. But you guys can see how I do that in the course or, in the chat. That's something that I don't want to teach new traders because, greed will get the best of you and I don't want you to blow your account. So let me just set my alerts up. So whenever people are wondering if the trade's filled, I put alerts for everything. So the thing with this is that, like a lot of people in the morning were asking if EJ got filled. It got filled because I got the alert. Like I set an alert for pretty much everything. So like right here, I'll have the entry price. And then I'll set an alert for NZD USD and I'll put filled. So once price reaches that price point, see right here, price is above it. But as price comes down and I get this alert, this is when I know it's filled. So, there's some confusion depending on your broker because your spread might be different, but I'm going off the actual real numbers on here. And the thing is, I'm taking the trade on my own account as well. So, when I get that alert, I'll enter market on my phone if it hasn't filled yet. But I'm going off the trading view numbers. So if it's ever filled, I'll have the alert, and that's how I know that it's filled. If it's not filled, then I won't get the alert. So in that situation, obviously it would be totally different. So full TP. And this is what I do with every trade. I set alerts for everything so that once the price is hit or the TP is hit or stop loss is hit, that's when I give the update. I'm never really on the chart like 24 hours like a lot of people think I am. I'm literally only on the chart when I need to be, when the 4-hour candle closes, because that's when I send out signals. Otherwise, I just have alerts set up, so I don't have to be on the chart all day. Like I'm in the chat all day, but I'm not on the chart. Because if I was to stare at this all day, every day, I get sick and tired of it. So all right, there we go. So I have alerts set for everything. I have, whoops. All right, so right here, You know, obviously the entry is filled technically if you guys are trying to enter this trade. I have a stop loss set over here, so I'll get an alert for that. TP1 alert, TP2 alert, full TP alert. So that's pretty much how I set up my trade. And so let's see. Oh shit, Dion said there's news. My bad. I didn't even check for news. Ah, fuck. There is news. Hold up. Yeah. Thanks, Dion. I didn't even think about that. Oh man. Thanks, Dion. I didn't even catch that. Yeah, there's news at 7 and 8. It's because Aaron's not here. Usually Aaron's here to give me to let me know what's up, but he's not here today. So yeah, fuck. I hope nobody entered that trade. Yeah, I mean the news could help. It's really it's a coin toss whether it's gonna affect the market positively or negatively, but we'll see how that plays out. Let's see. 1, 2 hours. Kyle said, hi, Shawn. Any potential US 30 trades was on a phone call, so I missed your live. Hey, Kyle. We're still live. Live now, but no entries at the moment. Guys, 1 second. I'm going to go get a drink real quick. Be right back. All right, guys, I'm back. So let's see. I'm gonna go back down the questions. So let's see what we got here. Ebony's asking, she's still here? Yeah, Ebony C's asking, do you have a bio course, and how much if so? Also, what's the website again to get the indicator? Yeah, so Ebony, for the for access to the indicators and the course, you can sign up on our website at k2trades.com. It's just k2trades and then .com. And once you go here, we still have a trial going on right now. So if you want access to everything, you know, the indicators, the strategy, all the previous webinars, and all the premium K2 groups that we have here. So the premium K2 groups, we have the K2 premium signals channel. This is where I send all of my trades. Then we have the K2 premium chat. This is where all the members chat. And then we also have the K2 premium trade talk. So this is where everyone talks about trades. So to have access to all of that, the indicators, the strategies, all of the previous results and everything, it would be here. So you just scroll down and then you can sign up for the $50 trial. After that, the monthly is going to be $150 a month. Or if you want to do the year, this is what a lot of people do. Like they'll start with the trial, they'll do 1 year of monthly, and then they'll just buy the year because they're so satisfied with everything. And then once you have access to the course, this is what the course looks like. So you enter here. It has the getting started tabs with pretty much all this stuff over here. How to access the premium groups, the trading view loophole, the how to access the indicator, and then my watch list here. So if you guys want to trade exactly what I do, I have my watch list right here. So I have it shared right here. If you guys want to copy all the assets that I trade, if you want to just download it, you can click here and download my watch list, and then you can go on trading view and then you can just import it. So you click on that right there, and then you can upload my watch list, and it'll look exactly like how mine does right here. What else is there? yeah, I think that's about it for that. There's nothing else really. If you keep going down, there will be a more detailed breakdown as to the strategies that I apply. The but the main strategies that I do apply are the K2 SR zone trading strategy and the K2 pivot strategy. So I still apply these strategies on my own if I want to intraday trade. But if you want to trade exactly how I do with the signals, then you can just copy, you can learn these two right here. These are the two main ones that I've been applying lately. And then if you want to trade the daily US 30 strategy that I just explained earlier, which is super simple, you just wait for the market to open and then you take the first valid K2 signal. That'd be this strategy right here. But it's super simple. Like you don't even need to really learn it. You literally just wait for 6:30 a.m. Pacific Daylight Savings Time, and then you take the first valid K2 signal following the market open. And that's pretty much it. So let's see. Yeah, so Charles said, yeah, you're right. It tested the zone, which could be used for reentry. Yeah, definitely, Charles. So, going back to the zone strategy, so all these zones here have been, so these zones have been drawn from way back here. So this zone started way over here, and this zone started way over here. So every time price broke the zone, you have a good understanding as to where the strong zones are because this has been drawn from way over here. So this was drawn on June 8th. And then just going over here, this zone was still strong a whole month later. So here, July 7, all the way up until July 20th. So like from June 8th to July 20th, this zone right here held. So you can see whatever price broke below, you could have taken a sell. When price came over here, rejected, you could have re-entered for a sell. It just really depends on how you want to apply it. There's a lot of people that subscribe to K2 just for this indicator, for the SR indicator, because it helps take out the guesswork as to where the zones are. So if you take all this stuff off and you just have the zones up, it takes off all the guesswork. Because the problem with zones is that a lot of people place them in the wrong places. So as you can see right here, there's even more zones down here. I just didn't draw them because I don't like, there's like no point for you to focus on zones that are so far from current price because obviously price is up here. This would be good if price was to break below this zone over here. So if price broke below this zone right here, then it would be good to know where the lower zones are because odds are price probably to come down, test that zone, and then maybe reject off it, or it might keep continuing down to this zone. So it kind of gives you a good understanding as to, where price is likely to reject from, and then where is it going to go next. All right, so that's that. Hide those zones. And that's one thing that I like about taking the zones off because as you can see, when you add the zones to the chart, it kind of scrunches the screen up a little bit. So it's kind of hard to see. But once you take off the SR indicator, it becomes a whole lot easier to look at just by looking at where price rejects from. And then, like I mentioned, it takes out the guesswork because, someone else would think that this is probably a zone right here because it tested twice for a double top. And although it might be, it looks like it'd be a decent zone. The thing is, the using the indicator, it'll pull data as far back as you want. So for the indicator right here, I have it set to 100 candles back. You can set that to like 500 candles back, depending on how far data you want to go. Obviously, I trade intraday, so I want to know where price has been within 100 candles. So that's why I have it set to 100. But let's keep going down to see what's going on here. All right, so let me keep going down the Q&As. Andrew said, but when it comes to indices, doesn't the value of the companies affect the values? Andrew, so the thing with stocks is they're still manipulated. Like if someone owns like 70% of a certain stock and they sell it all off, price is going to go down. It doesn't really matter on obviously, yeah, growth of a stock will depend on the value. So let me see if I don't think there's news for when stocks drop. Like there's no news that are that are connected to, yeah, because on the Forex, you'll have like the news tabs down here. But the thing with Tesla is the value of Tesla is high. So why is Tesla going down? It's because people are pushing the price down. Like stocks are probably the most manipulated things like available, because the stock market is only like $1 billion market. So you only have to sell so many shares to make a stock drop, opposed to a currency where it's $1 trillion market and you have to, you'd have to sell a lot or something would have to happen in the world for a currency to drop. But for a stock like Tesla is doing good, that their earnings are great. So, for it to drop down this, and this will just, this will debunk your theory that it should be based on the company's value, because the value of Tesla is very high. So why did it drop from 1,517 to 1,300 down here? I know that they did a 5-to-1 stock split, but technically that helps the company because people could buy the stock for a discount. But yeah, you can see here. So if I zoom out from here, see Tesla's been doing great, but then from right here on July 13, it started dropping. Like the value of the company didn't go down. It's just people were shorting the stock. So there's a lot of different factors that go into why stock prices go down, but it's not specifically based on valuation. It just depends on who has the most stock. It's like Bitcoin. So if you look at Bitcoin, Bitcoin will have random spikes in price. Like this didn't drop because valuation of Bitcoin dropped. This dropped because whoever had the most Bitcoin sold off their Bitcoin, and then the price went down. And then it pretty much goes sideways. So, I mean, there's a ton of different ways to analyze the fundamentals of stocks, cryptos, currencies, or whatever you want to trade. But I wouldn't base stocks specifically on the valuation of the company, because, there's a lot of different things that could affect the market with regard to their strength of, their cost. But yeah, no problem, Andrew. So let's see. Keith wants me to look at NASDAQ 100. So let me pull up NASDAQ real quick. I'm just going to set this back to the normal settings. I think NZD/USD should be fine though. So I'm just going to keep this marked up just in case. I mean, I already called it, so I can't take it away. So if you guys are in that trade, that's cool. But so I'll go to NASDAQ real quick. All right, so it looks like I already have the zones drawn up from before. So let me turn on the SRs. Yeah, zones are pretty much the same. There's more zones right here, but I mean, it's kind of irrelevant until price gets around that area. So I'll just leave the zones as they are. Look at the pivots. So this is kind of a tough call, Keith, because, let's see, I'm gonna spread the zones out right here, because the thing is, this just might be like a temporary pullback, because you can see it's happened here before. So price came down right here. What might happen is it'll either correct back upwards, or it might come down further to test this zone before it comes up. It's kind of like it's in a limbo right now. So let me see if I could find the I'm gonna look at the IG sentiment. So NAS 100 IG sentiment, because this is probably going to be the more important thing to look at when you're trading something like that. So people are right in the middle. So the difference between US 30 was that there's a whole bunch of short sellers, but with NASDAQ, there's only 54% of short people in the market. So this could literally go either way. So the thing is, if there were more short sellers, then I would be more inclined to take a buy, because I don't want to trade where everyone else is trading, because the banks aren't going to make it that easy for the majority of people to make money. They're going to want to stop those people out and take their money before they push it in the proper direction. But since there's only 54% of people short, it's middle ground. So it could literally come down, or it can correct back up. I would wait for some sort of confirmation. Like I would wait for it to either break above here to take a buy, or break below here to take a sell. because you don't want to be caught in this point. Because the thing is, if you take a sell right here, price might come down close enough to getting near to this this zone here, and then it might skyrocket up. Or if you take a buy, say you take a buy right here, price could reject off this SR zone and shoot straight down. So you don't really, like, I personally wouldn't want to take a trade where I'm not 100% sure the direction of price. Let's see where the momentum's going. So momentum right now currently is going down. There's a false sell right here, but it was followed with a strong bearish candle. So this would confirm that it's in a bearish bias right now. But just like how it moved today, I mean, you know, there's a lot of different key factors as to how it'll move. And me personally, I don't like to trade indices after hours. So me personally, I would just stay away from it. But it could technically go either way. It can either, you know, like I mentioned earlier, come down, test this point, and then shoot back up, or it can shoot up from right here. Whoops. It can shoot up from right there, and then either shoot up higher to, you know, correct to the overall trend, or it can come back down. It just really depends. I mean, there's a lot of stuff going on in the news. Like I think Biden announced Kamala Harris as his running mate. So, you know, that's going to affect the market too, because that's probably going to tank the market, honestly. Because if Biden has a better chance in winning, then, you know, obviously the stock market's going to hurt. So there's a lot of different factors. This is why I'm so like cautious with indices. I mean, that's probably what crashed US 30 today. I don't know when that was announced that Kamala Harris was his running mate, but, you know, I'm sure this had a lot to do with it, because Biden he's not for stocks. He's not for money for stocks. He's for I mean, I don't know what to call it. I used to be a Democrat, but I don't know if I like fall under that anymore because of his policies. Like, you know, I'm in the business of wanting to make money now. So when you make money, it kind of doesn't fall in line with Democratic views, well, specific Democratic views. So me personally, I don't know. I don't like Trump, but then I also don't like Biden. So, you know, it sucks either way for us. But yeah, if Biden has an upper hand, then the stock market's going to hurt regardless, because, you know, his policies that he has in place, or that he's going to put out if he gets elected, it's not going to help us at all. So let me see. Let me keep James. Welcome to the Libertarian Party. Yeah, no, I agree. Yeah, dude. I mean, it's hard for me to choose sides now, you know, because we don't really have good choices. So it kind of sucks, but I mean, we got to deal with it. So yeah, Keith, you know, going back to NASDAQ, I would just stay away from it for a while until there's some sort of confirmation that it's either going to go up or it's going to go down. Because right now it's just limbo. It's going to go sideways until it decides, you know, what direction to go. All right, so let me keep going down the questions. So let's see. Yeah, anonymous attendees, not a question, but there's NZD news in an hour. Yeah, that was my bad, guys. Yeah, thanks Dion and anonymous attendee for letting me know. Usually Aaron's here and he gives me the update before I call the trades, but Aaron's not here today. So unfortunately I missed that, but hopefully that still pushes NZD USD downwards. I think it will. But I don't know. We'll see, because NZD news usually affects it pretty heavily. So we'll just let that be for now. Keith said, can I get those zones? Hey, Keith, I'm not sure which. Oh, are you talking about the zones on NZD? I mean, on US NASDAQ, I think. Yeah, Keith. So for NASDAQ, I mean, you have the indicators, right, Keith? So I just went on the 4-hour, and then I turned on the K2SR and K2SR V2, and the zone's already there. So if I was to hide this right here, the ones that I drew, you could just draw right over these zones. So this is how the chart would look without the SRs, and you would just draw your rectangles right over them. so that once after you draw that and then you hide the indicator, it looks nice and clean like that. But I mean, if you want to look at the zones, these are, it's pretty much just this big wick right here. And then, I mean, it's going to be hard for you to mirror what I'm doing. Just, I think you're better off just turning on the indicator and drawing it on your own, because it's not that difficult. But yeah, let me keep going down the list. Tiffany, I saw your question up there. So let me go back to Tiffany's question. She said, for multiple TPs, do you move stop loss to break even or in profit or hold with the original stop loss? I always seem to get knocked out after TP1. Yeah, Tiffany. So the way that I trade, so I trade a little more advanced. So the way that I do it is I will, so say if I was to enter this, I mean, I wouldn't say what I trade is advanced, but it's a little more complicated for other traders that aren't familiar with actively managing trades. So basically, this would be the full move, right? So I'll just rewind this. I'm just using this for demonstrational purposes. So say if we were taking this buy right here, our TP1, our TP2 would be around, generally we usually only have 2 TPs, but lately because the market's been all over the place, we added another TP just for extra protection, but it's not 100% necessary. So the way that I teach everyone to manage the risk and adjust their stop loss is once price reaches TP1 up here, what we're going to do is we're going to move our stop loss to TP1. So in that situation, if price shoots above it and then it shoots down, you've guaranteed this profit right here. You've eliminated your risk. The trade is risk free. You don't have to worry about the trade at all, because once price reaches this point, you have one of two choices. You're either gonna hit full TP or you're gonna hit TP1, but you're not gonna take any losses. So for the most part, this is going to be one of the positions. So for one position, once price reaches that specific point, like it did right there, so price reached that point right there, we would have moved our stop loss to here, and then we would have guaranteed about 1,350 pips. And then you see price came down right there, it would have stopped us out, and we wouldn't have gotten full TP, but that's fine. But the way that I do it is I run twin positions. So I run one position where I move the stop loss, and then I run another position where I run to either full TP or stop loss. So in this situation right here, let's see if it hits TP. So it ends up hitting TP, right? So if you trade like how I do, where I have two positions, I have one that runs to full TP or full stop loss. And then you have the twin position, that's where you adjust the stop loss. In this situation, I would have hit full TP, so that's a full win, plus a half. So I'd have 1.5 times profit. But I don't recommend you do that unless you're super comfortable with doing that, because the problem is you might focus on one position, you'll forget about the other one. And then you can end up having two big losses if this hits, lost twice. But the thing with the K2 strategy is that we have such a high win percentage that the odds of that happening are super unlikely. It's probably 1 to 10. Out of 1 out of 10 trades, it might happen. But most of the time, you'll probably hit 1.5 TP or 2 times TP. So say if this thing just shot straight up, right? You would have just hit TP twice for 2 positions. Then you would have had 2 times profit. And that's how I specifically trade. It's worked for me in the past, and it's been working for me for a long time. But it's just something that I don't openly trade, because I know once people start hitting TPs like that, they're going to get greedy and they're going to, over leverage, because you're only supposed to be risking like 1 to 5% risk per trade. And the thing is, if you're risking 5%, you're supposed to split that in half with the 2 positions. But with a lot of people, they want to take 2 5% trades, and then at that point they're risking 10%, and that's a huge over leverage of their account. So personally, I would just recommend doing what you're doing, our simple exit strategy, where once price reaches TP1, move your stop loss to TP1. Otherwise, if you feel comfortable, then yeah, run twin positions, but only if you're like 100% ready to do that. Because I mean, the last thing I want to happen is, you get too cocky because you see that it keeps hitting, and then you end up, taking a big loss, due to over leveraging on like one account. But yeah, so that's pretty much it for that. Let's see. Tiffany's asking, are your SR zone supply and demand. They're more so support resistance areas. So the way that that indicator was developed was that I had it developed where if price was to come and test a specific price point. So say right here, price tested 10,372. If this exact same price point was tested in the past, then it'll create a zone. But it has to test that same exact price point. It can't be a pip over, a pip below. It's got to be the same exact price. And that's why it's so accurate and it takes out the guesswork. I know it looks like supply and demand, but well, I mean, I guess it could be considered supply and demand, but me personally, I would just consider it support resistance, which is, just about the same amount. So right here, you can see 11,071.2, 11,071.2. See, the same exact price was tested, and that's why it created a zone right there. The zone won't be created unless price is tested that area twice. It has to be the same exact price. It can't be one pip over, a micro pip over, micro pip below. And that's why this indicator is so accurate, because essentially what it's doing is it's identifying the algos in the market. So, banks use algorithms, they use algo robots to pretty much trade at specific price points. And the thing is, whenever price reaches that point, the K2SR will identify that zone. So the thing is, if you know where the algos are trading, that's where you want to avoid. You don't want to be trading during those areas, because if the algos decide to push price from that specific price point, last thing you want to do is get caught in that trade. And that's why this is such a powerful tool. Yeah, I think that's about it. So let's see. Is there any other questions, guys? It looks like we're all done with questions for the day. If you guys have any other questions, I'm here to answer. If you guys want me to go over any strategies, I can help you guys out. But otherwise, if there's no other questions, I'll just hang around for a little bit. But if nothing comes in within, the next couple minutes, then I'll probably just get off. I'm going to grab dinner. So like once I get back, I'll be available on Telegram if you guys have any other questions. Otherwise, we're probably going to wait for news to pass, because news comes in about 30 minutes. So it's not a great time to enter any trades at this time, because you don't want to get caught in any of those crazy movements. Let's see. All right, Charles said go over the scalping strategy. So if I go on a 10-minute, Tiffany said, how often do you do live trading sessions? So I do this every Tuesday and Thursday at 5 p.m. I've been trying to incorporate the New York session, but I'm just like way too busy during New York session, because I'm trading my own personal account, plus I'm giving out signals, plus I'm just doing a lot of things during New York session. So unfortunately, I can't go live during New York session, because I'm just too focused on different things. But I generally do this during Asia session, 5 p.m. Pacific Daylight Savings Time, where the market's slow. So during this point, I'm only looking for trades at 6 p.m. anyways. So once it hits 6 p.m., I'll look for trades and I'll actively trade. Other than that, I'm here answering questions and going over, any strategies that anyone wants me to go over. So yeah, if you ever want to come to these again, pretty much every Tuesday and Thursday, 5 p.m. But going back to Charles's question, Charles said to go over the scalping strategy. So I'm gonna go over it right now. So I'll go over it. Let me see if I still have that. Okay, so this is the scalping strategy. All right, so looking back at the scalping strategy, which is the K2 pivot strategy, this can be used on all time frames. You can use it on the 10-minute, you can use it on the 30-minute, you can use it on the 1 hour, the 4 hour. It's really, it's not specifically a scalping strategy. This strategy is specifically a momentum strategy. So if there's momentum in the market, which is, when you scalp, because obviously you want to trade when price is moving, you want to trade when there's momentum. So although it's considered, it's somewhat considered a scalping strategy, it's more considered a momentum strategy. So if there's momentum in the market, when this is spread out, when the pivots are spread out, then there's momentum and you can scalp during that time. Obviously, you don't want to scalp when price is going sideways. So right here, price is cutting through here and the pivots are all kind of jumbled up. This is not a time to scalp, because you're going to get caught in a trade, and then the trade can go either way once price starts to actually move. So here's an example. So, going back to the first requirement, we'll just replay it from right here. All right, so from right here, this is technically going to be a risky trade, and I'll explain as I move forward. But so first, we're going to look at the first requirement: identify the trend. Price is trending right here because price is below the pivots. The pivots are angling down, and they're spread out. So this would be considered a downtrend, and this is why it's a little risky right here, because the problem with this is that price isn't currently, it's not how it is right here. So the pivots right here are spread out. Right here, they're kind of jumbled up. So me personally, I probably wouldn't have taken this trade. Also, you can see for the third requirement, you want to identify a rejection off the K2 pivots area. Typo. So the thing with this right here, price came down and then it retraced right here, but it retraced all the way past the pivots. So this would be considered a super risky trade, but I know a lot of people actually took this trade. So if you were to take this and you wanted to take something risky, then it would have hit TP. But me personally, I don't like to take unnecessary risks. So I personally wouldn't have taken this trade, although I know a lot of other people did. So let me go back and find one where it's not super risky, but it was like a good trade. I should probably go to a normal pair. So let me go to a normal pair, not indices, because indices are different. They move way different than normal FX pairs. So let me just go to, I'll go to testing. I'll go to the 10-minute. And then pivots. All right, so this is Euro USD. Go back over here, and I'll just replay it from right over here. So this is recent. This is actually today. It wasn't even that long ago, 1600. So it was about like 2 hours ago. So this entry came up 2 hours ago right here. And then just going over the requirements again, let me set it up right here. K2 pivot strategy. So first, identify the trend. In order to do that, you're going to use the K2 pivots indicator. In order to identify a downtrend, you want to make sure that price is below all 4 pivots like it is right here. So price is below all 4 pivots. The pivots are all angling down. You can see level 4 is angling down, level 3, level 2, and level 1. So once they're angling down and they're spread out like they are right here, they're kind of jumbled up right here, but they're still spread out. Like if you zoom in, you can see that the green and the yellow are spread out and they're both angling down. So looking at price right there, obviously price is in a downtrend. Next up, you want to identify a retracement. So price came down right here. It established a low right here. Then it retraced up all the way over here. And then you can see a nice rejection off this area from all the wicks. So you can see price came up and then it had some trouble pushing farther up and then it just moved sideways. So price came down, retracement, rejection off this area right here. And then lastly, identify a valid K2 signal. Right here is a valid sell signal because it's a red sell signal with a red bearish candle. So once you have all those requirements met, we've identified the trend, identified the retracement pullback, identified the rejection, and identified a valid K2 signal. Once all those have been met, you can enter on the open of the falling candle. So right here, we'll enter a short position. And your stop loss will be really subjective. You can put it at the previous swing, which technically would be here, but it's way too close. It's 6 pips. You can put it at the previous pivot. Right here is 9 pips. It's still way too close. And then, or you could put it at the previous pivot right here, which is about 11 pips. It's still like way too close. So I'd probably give it some space, depending on what pair you're trading. Probably 15 pips sounds about right for this specific pair, since it's a major pair. So right there, if you want to scalp about 15 pips right there, you can let this run. And then technically it's still active. So I'm still anticipating it to come down right here. But if you set your TP1 or TP2 at the halfway mark right here, odds are you probably would have gone stopped out in profit. So instead of hitting 15 pips, you'd have gone stopped out at like 9 pips or 10 pips. Just really up to your preference. So there's an example right there. Let me see if there's another one over here. Zoom out. Okay, again, right here, same situation. Identify the trend. So we've identified the trend here. It's clearly in a downtrend. Price is below the pivots. The pivots are angling down, and they're all spread out. Like there's a nice downtrend right here. So once you've identified the trend, you're gonna identify a retracement. Price came down right here, came up, came down, came up, came down, established a low right here, and then it came back up. So as it retraced right here, this satisfies the second requirement. Lastly, you want to identify the rejection. You wait for a rejection off this point. So you can see price came up. There's some nice wicks right here, 1 wick, 2 wick, and then it's a nice rejection downwards here. I guess you can consider this a rejection. It's really subjective, but as long as it rejects within the pivot area, you're completely fine. Because price came down, it shot up. This could be considered rejection. This could be considered rejection. It doesn't matter because it's within the pivot area. So requirement 1's been met. We've identified the trend. Requirement 2, we've identified the retracement as price came down, retraced upwards. Lastly, identify the rejection. Although there's 3 points of rejection here, one of them will suffice. So 3 requirements met. Last requirement, identify a valid K2 signal. Right here we have a valid sell signal since it's a sell signal with a red bearish candle. Once that's been identified, you can enter on the open of the falling candle. Like I mentioned earlier, enter a short position. You put your stop loss at the previous swing, which could have been right here. It's only 6 pips. It's way too tight. Probably move it at the second, second to the last pivot right here. It's still too close, 7 pips. The last pip, it's only about 11, 12 pips. Like I mentioned before, 15 pips is probably going to be the sweet spot for your USD. It just really depends on the pair. And then if you let that run, yeah, so right here, this is why I always emphasize eliminating your risk and moving your stop loss and profit. Because right here, if you move your stop loss to TP1 or halfway mark right there, same situation as we went over earlier. As price came down right here, if you move your stop loss to this point, you would eliminate your risk. So if price was to reverse like it did right here, you'd have gone stop down and profit. So instead of taking a loss right here of 15 pips, you could have taken a win right here for about 8 or 10 pips. So if you measure this, yeah, about 6 pips, 6, 7 pips. So, if you keep doing this and you keep eliminating your risk, then, odds are if you eliminate your risk every single time and you lock in half profit every other time, those small profits are going to add up. The main key to surviving and trading long-term is to not lose. Like that's the reason why a lot of people fail at trading, is because they don't know how to eliminate the risk. They get too greedy. They want to go for the full profit when they could have just taken half profit. And this is a clear example. So if you eliminated your risk, you would have locked in half profit instead of taking a full loss. And then this would be another entry right here. So this was one entry. And this thing right here, I might have overstepped it with the stop loss because I don't scalp anymore. So I don't know what the stop loss should be. Maybe this was too far out. Maybe if I put my stop loss right here to the previous swing for 10 pips, then it would have hit TP right here. So I mean, it's really up to you. I don't scalp anymore, so I can't really advise on where to place your stop loss. Generally, I put it at the previous swing, but like I mentioned, this previous swing is way too tight, 7 pips. I mean, yeah, if it was 7 pips, you would have hit TP too. Maybe the stop loss was just too wide. I can't vouch that I'm doing it properly because I don't trade like this anymore. I only trade on the 4 hour. So if there's an analysis on the 4 hour, I can give you a good analysis. But on the scalping, it's really going to be like an iffy thing because everyone scalps a little differently. I used to scalp a lot, but I didn't scalp where I would set it and forget it. Like I would literally wait for it to come down and then I would exit manually. I wouldn't just wait for it. But yeah, if you wanted another entry, there's another entry right here. Short position again. Identify the trend. Price came down, retracement, rejection off this point, sell signal, enter a sell. And then right here, it looks like if your stop loss was at the last pivot right there for 13 pips, looks like it would have hit TP right here. But it just really depends, like you would have to adjust it to your style because even though I teach it a certain way, you're probably still going to trade it a different way. because that's just how people trade. You know, everyone has their specific style. You don't have to follow the rules exactly as they're taught. You can learn the foundation of the strategy, and then you can make adjustments how you see fit. But yeah, guys, looks like that's it for the questions. I don't know if anyone else has any other questions, but it's getting close to 7, and we've been on this call for about a little over 2 hours. So I'm going to put this on YouTube. If you guys have any other questions, feel free to reach out on Telegram. You know, I'm always available. Otherwise, I'll catch you guys in the chat. So yeah, it was a nice trading room. If you guys are new here, remember this is every Tuesday and Thursday at 6 p.m. And if you guys have any other questions, feel free to reach out to me on Instagram, Telegram, Facebook, I don't know, whatever you guys want to reach out to me from. I'm available on all K2 platforms. But yeah, guys, thanks for showing up, and I'll see you guys later.